Hello and welcome to Finextra. I'm Josie Waite and I'm here with Peter Jameson from Bank of America Merrill Lynch, and we are talking about trade finance. Thank you for joining me, Peter.
Thank you.
Everyone is talking about blockchain, and trade seems to be the obvious reason for its innovation. Do you think it could have a positive impact in this space, and in what way?
Absolutely, and I think when you think about blockchain, trade is a very obvious place for blockchain to have an immediate and a practical benefit. You've got to really look at what the challenges are in trade finance. It's very manual, it's very paper-based, and it's slow. So when you think about what blockchain will bring, I think it can have some very immediate and real positive benefits. One of the key things about blockchain is its distributed ledger. And the distributed nature of blockchain means that you could quite easily move from a place where a lot of things have to happen in sequence to a technology where a lot of the players involved in a transaction can do what they need to do all at the same time. And that's very powerful when you think of the slow nature of some of the trade transactions today. Of course, what's important though to have distributed data is to have the data to start with. So that's one of the key challenges. Blockchain alone is not going to solve the problem. It's going to be part of a range of technologies that will be needed in order to get us there. So how you actually digitize some of that paper at the outset, plus the distributed nature of blockchain, I think in the future is going to make it a very powerful tool.
Do you see the industry moving towards a common set of standards for the implementation of blockchain in trade finance?
I'm starting to see that happen, and I think it's extremely important. If I think back a couple of years, blockchain was very much a concept that people were trying to come to terms with. We then saw that phase of proofs of concept and what might this mean for us. And we're now at a stage where it's going to become a practical reality. And for that to work, we really need to develop some form of common approach. Of course, the challenge with blockchain and trade in particular is it's not just about the banks. There are a lot of constituents. You've got the customs authorities, the shipping companies, the buyers, the sellers, the banks, the government agencies. So as we think about how we get common standards, we're going to have to do it in a way that gets all of those players on board for it to be a success. I think the other component of the standards discussion is it's going to have to be flexible because blockchain is relatively new. The world and the other technologies continue to evolve. So whatever standards are set are going to have to be rigid enough to get everybody onto the same common approach, but flexible enough that something like blockchain, given the investment that will be required, will be future-proof.
What other industry tech innovations are impacting trade finance or set to impact in the future?
There are a lot of really exciting technology innovations out there which, along with blockchain, will really help digitize trade and resolve some of the inefficiencies that exist today. When I think about even closer to home innovation like optical character recognition and how that is improved, the ability to screen scrape, to put robotics and artificial intelligence, that really becomes very powerful when you're looking at taking all of the paper-based flows into data. And those are very important innovations which, along with blockchain, will not only help resolve trade finance flows, but will also help in areas like smart contract negotiation and know your customer processes, for example. And when you look at trade, you've also got to look at innovation in payments, because at the end of a trade transaction is often a payment. So what's happening around real-time payment flows and the Swift GPI initiative, which will bring greater transparency, all of those things together will combine to make digitization of trade a reality. And then the blockchain added into that will give us tools that will really help take our business to the next level.
What have been the biggest changes to blockchain in 2017? And how do you see this technology developing further in the next 12 months?
I think 2017 is going to be a real watershed year for blockchain and some of this new technology as it relates to trade finance. If I think back to 2015, people were very much coming to terms with some of this new technology and what does it mean. In 2016, there was a lot of focus on the fintechs and people looking at proofs of concept. How could we make this a practical reality? In 2017, we're really seeing the rubber hit the road. We're seeing consortia of banks come together, groups of banks and third parties start looking at making blockchain a practical reality. So I'm expecting that over the next 6 to 12 months, we're going to start to see some of the things that the industry has been working on, including some of the proofs of concept that we've been working on at Bank of America Merrill Lynch, really become a practical reality. And that's when we can start looking at it from a customer-centric point of view and discussing with our customers how they can start to leverage this new technology to make the whole end-to-end process much more efficient.
Thank you very much, Peter.
Thank you.
And thank you for watching.